Right now in Seoul's premium apartment market, a flood of super urgent discounted listings is hitting the wire, distress signals from foreign capital fleeing the country. For years, multinational investors exploited regulatory blind spots to sweep up prime real estate. Because they operated outside the domestic financial grid, they bypassed strict lending limits and poured in limitless, untraceable all-cash purchases from overseas. That dynamic has abruptly reversed. This highly calculated capital is now intentionally taking massive financial losses, what insiders call financial bleeding, to liquidate and exit the Korean market immediately. When investors who normally ruthlessly optimize for profit start panic selling at a loss, the market is no longer simply dipping. It is revealing the first signs of a deeper structural breakdown. The primary force driving this exodus originates in their home court. A deep deflationary crisis and the collapse of the real estate sector inside China are squeezing over-leveraged investors, forcing them to liquidate their overseas assets for immediate survival cash. This chart illustrates the secondary driver, the crushing exchange rate. As the won to dollar exchange rate climbs, the retained value of won-denominated assets plummets. Even with flat housing prices, foreign holders lose massive wealth simply by holding the asset. These speculative investors are caught in a lethal vice. With a liquidity drought at home and a severe currency bleed abroad, a desperate, immediate exit is their only viable option. This aggressive strategy has a clear historical precedent. By utilizing cartel-like cornering tactics to buy up available supply, foreign capital previously drove housing prices up by 3.6 times in Canadian markets like Vancouver and Toronto. The resulting damage to local affordability was so severe that Canada implemented a complete legislative ban on foreign property purchases, a lockdown that has since been extended to 2027 to stop the bleeding. As the Korean housing market becomes less profitable, this predatory capital is pivoting toward much more dangerous targets: national infrastructure and corporate acquisitions. Recently, a Chinese-backed private equity fund moved to acquire Korea's top real estate asset management firm. This firm controls critical data centers, energy storage systems, and major logistics supply chains. This move marks a major strategic shift. Predatory capital is moving past residential speculation and into the control of the nation's core infrastructure and security networks. In response, the Korean government has rapidly deployed a tighter regulatory net. Authorities now mandate strict reporting of visa status, aggressive tracking of overseas funding sources, and rigorous 183-day residency verifications for foreign buyers. They also expanded land transaction permit zones. This policy imposes strict live-in requirements on property purchases. For non-resident foreigners relying on gap investment, leveraging a tenant's lease deposit to buy a home they never intend to live in, this rule effectively kills their primary profit model. At the same time, strict limits on domestic debt-to-service ratios have frozen local borrowing. This lack of domestic liquidity, combined with surgical regulations on foreign buyers, has successfully locked the exits, trapping the speculative capital inside a burning room. This brings us to the current market reality. The super urgent discounted listings appearing right now are distress signals from drowning speculators. They do not represent a safe entry point for local buyers. A true bottom requires 3 metrics. First, the auction bid rate collapses and stabilizes at 50%. Second, the lease price ratio recovers above 60%, confirming utility value. Finally, record high transactions must completely flatline to zero for at least 6 consecutive months. Until all 3 of these specific data points align, any minor price bounces are traps. Entering the market now risks locking your capital into an asset that has not yet found its floor. This macro-level chaos creates a micro-level opportunity. The massive void left by fleeing foreign capital is the exact space where genuine local homebuyers will finally be able to enter the market at rational valuations. Hold on to your cash reserves while the market's violent tremors fully subside. In a liquidity crunch, the ability to wait is your primary advantage. For those armed with cold analysis and discipline, the collapse of borderless speculative capital is not a tragedy. It is a rare, localized transfer of wealth and territory back to the individual.